Hi guys, hi everyone, good evening. Let me have a sound check. Can you guys hear me and see me clearly? Alright guys, hi everyone. Can you guys hear me, see me clearly? Let me check. Okay, you guys can hear me. Alright, should we just begin our session? Okay, again guys, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinars. Alright, so today topic we're going to talk about crafting your strategy, which is of swing traders today. Okay, so before I start the webinar, disclaimer first. Alright, okay, so I think okay, disclaimer here. Alright guys, so everything in this video is purely educational in nature. Okay, nothing in this video should be considered as an investment advice or any kind of recommendation, okay, for you guys to buy to sell the assets. So if you guys want to trade, just do your own due diligence before trading. Okay, so introducing your host today, my name is Peggy. I'm investment analyst and prop trader at Average Foreign Group. We are finalists for the best equity research in 2019 to 2021. Alright, okay, so this is the agenda for today. So basically we're going to cover what time frame should you use for swing trading. Okay, graphical key elements, identify momentum and breakout versus reversals. Okay, so which time frame for swing trading? Okay, so if you are swing trader, okay, you need to primarily focus on the D1 chart or D1 time frame. Okay, and you also can use H4, okay, for your entry and weekly for your trend context. Okay, so basically you look at the D1, okay, and after that you zoom in H4 for your entry, and typically hold duration for the swing trading, okay, could be 2 to 10 day average, or it could be up to 0 weeks. Okay, and multiple time frame analysis. All right, so you're gonna see here, first you need to use the weekly chart to identify trend, whether price on uptrend, downtrend, or ranging. Okay, after that, the next one, you use the daily chart to find the setup by either you look for like the key level, support, resistance, demand and supply, or you have any kind of like pattern, okay, that will be aligned with the weekly trends. Okay, and the next one, you can use the H4 chart for your entry. Okay, so fine tune, use the entry point and set the stop loss based on H4 time frame. So meaning that if you're gonna trade on if you are swing trader, your stop loss will be wider, but then your take profit gonna be even much higher because you identify the key level based on the D1, right, and H4 for your entry. okay, and then you need to look for the weekly for the trend like I just mentioned earlier. So that's a different. The duration 2 to 10 day average, or it could be up to 0 weeks. Okay, I consider myself a day trader. So basically I close my position within a day. Okay, so the key element that you're gonna look out for: first, you identify support and resistance, could be horizontal level, look for the previous high for the resistance level, and lows or multi swing low for the support. Okay, or you also can look for those like psychological number that will be ending with like 0 or anything that ending with 5. Okay, the trend line, you can use the trend line. So basically connect the swing high, swing low, and for the valid trend line have to be at least 3 touches. Okay, and then after that you might draw ascending or descending channel. Okay, you also can use the moving averages such as 20 EMA for like fast or short term. This one suitable for like scalping. And medium term, you can use 50 SMA or 200 SMA for the long term, meaning that usually whenever you see price is stay above 200 SMA, meaning that price is on the bullish trend. Okay, and then those like MA or EMA also acting as the dynamic support and resistance. Okay, also you also can look for those like candlestick patterns such as engulfing pattern, which is either bearish engulfing or bullish engulfing candle. If you see the bearish engulfing candle, that will be at the key level, either at resistance or supply zone, or if you see the bullish engulfing, that will be at support or demand. You can look for the pin bar. Those pin bar, you will see those like pin bar at the key level as well, or doji at the key level. Or you can see those like a lot of the rejection, meaning that that will be very strong key level. Okay, so how you gonna look for the chart pattern? We have 2 types of chart pattern, which is a continuation pattern and the reversal pattern. You can see flag or pennant for continue, ascending or descending triangle or rectangle. Okay, and reversal patterns such as head and shoulder, double top, double bottom, rising or falling wedges, or potential trend change. For the ascending or descending triangle, I saw that in gold, right? You will whenever, okay, we have a quick look on XAUSD. Not this one. Not this. Okay, here. Right, if gonna move here, do you see the triangle here in the D1 time frame, right? Well, now this is a trend continuation, which is price has breakout of the trend. Okay, one of these. Another one, lower time frame, you will see as well. Okay, look at gold, right? I think it seems like H4 is gonna form the double top. Okay, this is gonna form the double top. How much they falling from the high? Oh, 1,300 pip. Another one here, right? This one should be triangle, or is like that. You can see that, right? And now talking about the reversal, head and shoulder or double top, I think I just feel, which is I think H4 for gold is forming the double top, and this is the important level. If the body close below, meaning that you can wait for the pullback and then you continue to sell. But overall momentum is still bullish. Okay, don't forget, this is the important low that puts the price break up structure and make the new high. So this is the important low. If price could fall, break, and then I think that's gonna change of changing the momentum here. Okay, so the overall in the bigger picture is still really strong bullish. Okay, we're gonna look at that later, guys, don't worry. Okay, after we end the webinars. Okay, and how we going to identify the momentum. Okay, what is the momentum? They will say that the rate of acceleration of price movement and the speed of the strength of a trend. So the indicator that you can use, right, usually I will use which is the RSI, and some of you guys might be using the MACD or volume, but I use the RSI to look for the overbought and oversold, or if price is stay above 50, we know that very strong momentum. Let's say if price is continue to go uptrend, whenever you see the pullback, usually the RSI price gonna stop somewhere around 50, and after that we're gonna bounce and then continue to go higher. Okay, but if price is below 50, it's gonna be the belly, same, right? This is 50. Whenever price, okay, falling from 50, they will continue to fall. Okay, if there is strong bearish move, all right, we're gonna look at that together. For the MACD or moving average convergence divergence, if you're gonna look at the histogram expansion, meaning is increasing the momentum, watch for crossover and divergence. Okay, so for the MACD, if you're to wait for like crossover, it might be giving you the slow like lagging indicator, so we give you the slow entry. Okay, basically if you're gonna wait for like line to cross, sometime you might see the price action here, but you wait, right, the entry might be somewhere around that. Okay, so you may not have the best entry. Okay, so usually I don't wait for the crossover, and I personally don't trade with the MACD. Okay, and you can use the volume. Okay, rising volume confirm momentum strength, or price plus volume equal to conviction. Let me look at gold, for example, over here. Okay, what is this one should be the ATR. Okay, let's say you're gonna look at gold based on the H4, and this is my RSI, which is period of 14. Okay, here. Okay, remember that if there is very strong uptrend, this is let's just say over here, somehow this our identified as support level. Okay, and this is, I'm gonna move back to, let's just say to like to here. Okay, and we see that, okay, price have break up structure here, and we're gonna see the pullback around this level. Somehow we're gonna put 50 to 78.6, and 50% here we have another zone for the OB, right? And then you see that this is already overbought. Okay, that's how you can see the pullback. So this level is gonna be our first buy entry. We're gonna look for the buy entry for sure, because price has already still make a break up structure here. Hey, hello, hi guys, welcome, Karim. Okay, so look here, and the RSI, okay, this is level 50. I'm gonna put it here. Okay, usually if there is strong uptrend, RSI will respect level 50 and bound and continue. Boom, right? You will see that slightly break below, right? And after that you can see that respect the 50% Fibonacci level, and this is our bullish OB as well, right? You can see that. Then continue. Where your target, you're gonna buy at the pullback. This is your TP1, and if price continue to make the higher high, higher low, and break higher high, pull back, this is gonna be your breakout structure, and they respect, let's just say 50. Okay, you can see that, and they make a breakout structure. What you need to do, you need to wait for pullback again, and then you buy, follow the higher time frame. Okay, right? You can see that. This is the BOS in H4. This also the breakout structure here. Price may pull back here. We will come back here. Okay, right, and then continue, and now right here, and now right here is make the equal high. Okay, it is okay if you want to buy based on this level. On the lower time frame, yes, we buy, right? Price has already bought off 250 pips from these zones. Okay, from this zone. This is, any guys will get stopped out because of this demand. But today I did not trade gold. I traded EUR. Okay, so if I would trade gold, first touch here, you can see bounce up already, right? Here you can see that came in, which is the rejection from this one. Okay, from this price had rising, let's just say 250 pips, and from that, if you going to enter again based on M15 here, you will see slightly have the rejection, and after that price has broken below. Okay, based on the section, you see that the highest, that's what the New York PM puts the price like slightly make an all-time high, but the body is still close below, right? Asia section sell, London also sell. London even worse, I think. From the London section here, London high is about 900, let's just say 1000 pip. Okay, from here. So what are you gonna look for today? If you want to buy, you should buy here. 42.24. This one, I think just now, right? Oh, yep. 42.24. This was the, what is this? This was the opening day candle yesterday, right? That's why you see that people willing to buy at this level. Okay, so momentum trading signal. So what you need to look, whenever you see a strong momentum sign, price still make a consecutive higher high or higher low, or lower low, lower high, bullish, bearish. You're gonna for the bullish trend, right? You wait for price to pull back, then you buy. Okay, from the bearish, you wait for price to pull back or retrace. Okay, and then you sell. Okay, then price gonna make a breakout structure. This is the breakout structure for the bullish trend. Okay, price above rising moving averages, such as if price is stay above, for example, EMA 200, you're gonna look for the buy entry. Okay, I'm going to H4. I'm gonna use the 200. Okay, but here based on H4 time frame, right, whenever price have broken, okay, and pull back, this EMA will acting as your dynamic support level, and whenever you see the price is stay away from the EMA, we know that this is a very strong bullish move. Okay, and of course we already see that price have make a breakout structure or BOS. Okay, and then you're gonna look for the buy entry. The price have broken the EMA that was this candle is August 22nd. This candle broken, pull back and continue to go higher. Okay, also you can use the MACD for the histogram expanding. I know that a lot of the traders, they are using the MACD to trade, but it's just MACD is not my kind of favorite indicator. I only use the RSI to identify. Okay, let's look here. We are in H4. Okay, since here we might say the momentum like shifting, okay, from bullish overbought, close below, close, okay, which is closing. If you were to wait for closing, you'll get an entry here, and you look at the histogram. I'm gonna double click, right, meaning this is a bearish side. Okay, this is the bullish, right? Price is stay above zero line. This is a zero line, this is a below zero line. Okay, you see that? And also if you're gonna look here based on the H4, right, this was from the body to the wick, that was the supply zone, and the thing is price also did not close above, meaning the body did not close above the all-time high, right? Just slightly the wick clear the liquidity, right? They just clear this liquidity and they make the new high at 4381 and closing with price action. If you want to look for the candle, this candle you're gonna read, meaning that the selling pressure push the price down all the way down here more than 50% of the candle. Okay, 50% of the candle here. If you're gonna go for the low time frame, I think you're gonna see the confirmation with sure. And then after that price was ranging for a while. This is your bearish OB within the resistance level, let's say, right? And if we go on a H4, I'm gonna pull out the over here in H1, the MACD is close around this level, and we also have confirmation that we have the belly engulf, and the histogram also fall below the level zero line. Okay, and the RSI also falling from the overbought here and then falling right now. And we go to H4, whenever they finish the candle, this also closing with the body close below, okay, and continue to sell. All right, so another one for the weakening momentum, which is this talking about like the reversal pattern, okay, which is that you might spot the divergence, either the bearish or bullish divergence, which is price make the higher high and indicator is make the lower high. That is a bearish divergence, right? If you see the price make the higher high, an indicator is make the lower high. This is the bearish divergence. Or if the bullish divergence, price make the lower low, indicator it make the lower high. Is a bearish divergence. Am I correct? Yeah. Let me double check. Somehow I forgot. I remove the indicator. I'll go to H4. Okay, for the bearish divergence, I know that in the Yesterday confirmation M5 or M15. Okay, M15. There's a no. No. And from here, price make higher high. Indicator with make a lower high. Okay, bearish divergence. Bullish divergence. Okay, correct. Price make a lower low. Indicator is make the higher low. This is a bullish divergence. Okay, this is a bearish divergence. Okay, and slowing MACD histogram. Let me pull out the go to H4, or maybe you go to the M15 and then I pull out the MACD. I'm gonna delete this one. Okay, here, right? Whenever like you see very small histogram here, either it's sideways, I think we should go to the lower time frame, which is so here, like very small, you know, like small, something like that. We know that it's sideways. Okay, oof. Here, right? This was the sideways. You can see that price did not move. It was sideways here, it was sideways here. Okay, guys. Okay, and you can use the volume, or you can use the price struggling at the key level. Okay, I think I missed out this is the key level. And what about the breakout versus reversal? I'm not a fan of the breakout because whenever I play for the breakout, my stop loss might be wider or bigger. Okay, so I like to wait for like the pullback. Okay, I'm gonna show you later where we're going to put the stop loss whenever you play for the breakout or reversal. Okay, for the breakout is for the continuation or exit trend. Okay, price break above break key support or resistance, consolidation period, and volume surge on breakout, momentum already established. Okay, for the reversal, change in trend direction, could be price exhaustion at extreme, could be resistance, support, or demand and supply. Reversal pattern form double top for the bearish or double bottom for the bullish, or you can see those like price action or divergence. Okay, signal for the weakenings, counter trend, momentum build. So let's just talk about breakout. Let's say if you want to trade with the breakout for gold, right? Here, I'm gonna remove this. The easy one based on M5. Okay, I'm gonna move here somewhere. Let's just say either M5 or M15. Let's just say M5. I'm gonna move to the M15. Easy for you guys to look. There is some breakout. What is that? I saw that September, no, the beginning of October. No. Okay. Okay, let's just say here. All right. Okay, based on M15, price was ranging here from this level. Okay, so we're gonna draw, you're gonna draw from here the body. Let's just move. I'm gonna move from here to here. Why don't draw from here? Because over here is already get taken. Okay, because this is our bearish OB for scalping. Okay, price has already rejected and then falling. Okay, so I'm not gonna draw from this. I'm gonna draw from based on this body and this low. Okay, here. Okay, let's say this one was in October 2nd. Let me gonna move again. October. Okay, here. I'm gonna start here, for example. Okay, so we know that based on the goal in M15, price is ranging right now. Let's say if you're gonna play for the breakout, you say breakout. Oh, okay, now it's breakout is this candle. So your entry for the buy is gonna be at this candle. Okay, your stop loss is where your stop loss, either you put below this swing low, you might get stop out. You put like below this swing. Okay, and you see that you don't wait for confirmation. Okay, you get stop out where you take profit. You're gonna aim for the recent high, or at least like 1-to-1, or maybe like 50 pip, and then you just close up if you want to hold, right? Your entry was here, so your stop loss will be wider. Let's say if you're gonna wait for price, for me, I'm gonna wait for price to pull back, because below M15 I see there's a OB here, so the price will come to our bullish OB. Okay, this I'm wait for reversal, I'm wait for the pullback, right? This breakout. Let's say breakout, your stop loss here. I'm gonna get my entry. Okay, let's say from this level, go for long. Why I get this level? This is the support level. Okay, here resistance, rejection, right? Support level. So I put my entry here. So this was another my sell entry. I'm gonna change the color. Okay, and then I put my stop loss. So where is my stop loss? If I'm here, usually we're gonna put like below the wick. Let's just say you're gonna put the same. We refer to this, but usually you just refer to this wick, that is enough. And we're gonna aim for here, right? And you see that for my first entry, my risk and reward is 1 to, let's just say 1 to win. For my second entry is like more than 1-to-1. Like this is like more than, it's like 1-to-3. Okay, so usually you should wait for price to pull back. Okay, but sometimes price may not pull back, but 80% they will pull back, either at this at the box here, or sometime if you see like okay below there is a OB, you can wait here. Or the first entry for the pullback, you might buy here. Second entry, you can wait at this level. Okay, I have another example. Oh, let's me see. Where is my, okay, let's just see it trigger. Okay, and we aim for the high, and of course price make the profit. And from here, right, price had falling TP already, and falling is one, it could be because the OB here, okay, and then falling again. So this is a breakout. Or I have another example. For gold, okay, this is the triangle breakout, right? This is a breakout. Do you think price pull back? Let's say I'm gonna draw at this, okay, this is M30, I'm gonna pull back here. This one is ascending triangle, right guys? Yep, this is ascending triangle. Okay, so go to the M15. Based on the M15, okay, I already see that in this period here, I already see the breakout of this M15. This one should be London session. Yeah, I remember because it was like yesterday. Yes, price falling Asia, and then London was sideways, and after that New York opened and then pushed the price up. Okay, you can see that, right? Okay, its breakout is here already. So now I'm gonna wait for price to pull back. Let's see, it's gonna pull back in the lower time frame. I'm gonna go slower. Okay, I will go to M5. Okay, we will see the but M5 is here. No, if you're gonna draw M15, you don't switch, because if you're gonna switch, your ranging is gonna be here. Usually I will make it at the M15 to look for the breakout, and I draw at the body. Okay, not the wick. So okay, it's too fast, sorry. Here, okay, it's pull back. My entry is where, remember that I say sometimes they're gonna pull back at the box, and the entry was here. And now, and this candle, okay, we're gonna get entry here, also break the resistance, and also in the bigger picture break out the triangle, and close above the Asia high. Okay, this one is gonna be, let's say you hold and you can use the trailing stop loss. You can aim for, let's say, TP1 at the New York PM. This could be TP1 here. Boom, right? After from this level, from the resistance, now it's, you can see slightly a pullback, so there may be someone who sells here, break, pull back, and then buy. Okay, so it's done, right? From this breakout, if you, okay, go back again, if later you break out here, your entry, you don't wait for the pullback, your entry is gonna be at this level. Okay, but if I wait for the pullback, like I'm very conservative one, right? So my entry would be somewhere here. Stop loss, you can aim for this low, swing low, and you can just aim for the this one is the PM high, New York, right? To me, I think I started to use, like, you know, ITT killing zone toolkits. To me, it's quite helpful. You can just try as well, so you at least you know that, like, what section or high or what section is low. Okay, but if you can use this, I recommend it, but I know that there's so many, or there's one thing you can use, like this one. Okay, it's quite popular, you can see that, right? A lot of the people using, because they just tell you like Asia high, London high, London low, Asia low, Asia here, Asia London. Is up to you. Okay, but to me, I don't need that. I just need this, that's it. okay, and price have breakout, and you can see that it moving. And also another one, guys, if you move about 600 pip, if you trade gold, you will notice that currently per day gold move more than H4 time frame. It's about how many pip. Swing trade are often used in the D1 and H4. You identify, okay, for swing, okay, now we're gonna look for the swing. For the swing, swing trading, you identify key level on where on D1. Your entry could be in H4, meaning that now I'm a swing trader. Price have breakout. This is my, I do my setup. Price has broken here. I zoom for you guys to see, right? I just say here, or just put here, broken, and this is my resistance. This was the zones where from the wick and the body, breakout, pull back. So where is my entry? My entry is here, right? And they break out of the triangle. The first TP for the triangle, where the length of the triangle from wider here, from here to here, right? You just copy and then you place here when it break out. So price, this is your TP, and it gives you the take profit. You see the rejection. Okay, this is the swing. You take, you see that it's how many days for you to hit the take profit, like this. Just say 1 2 3 4 5 6 7 8 9 10 11. No, we look at for D1 weekly. Okay, break, just say 1 2 3 4 5 6, 1.5 month from here to here, and then you see the rejection. Okay, that will take profit. This for swing. Okay, you use H4, you use H4 for your entry. You use D1 to identify the key level. You use weekly or monthly to look for the overall momentum. Okay, are you often trade breakout or your favorite pullback? I just show you, sorry, I just saw your message. Pullback, I like to wait for the pullback. It's safer, okay, because if I wait for the breakout, okay, my stop loss will be like wider. So if I wait for the pullback, then I could have like really short, short stop loss, and then I could have my my loss, I could be bigger. Okay, so depend on the strategy. If you're aggressive trader, you see the breakout, then some of you guys might put the buy stop. Okay, but to me, I don't put buy stop. I wait for the pullback. So MT5, okay, for if you're using the MT5, right? MT5, that is the pending order. They have buy stop, sell stop. We already know that. Okay, they have buy stop, sell stop. They have buy limit, sell limit. You should use buy limit, or you use the sell limit, buy stop, sell stop, or you use buy stop limit or sell stop limit for the pullback better. MT4 have MT5 have, but MT4 don't have. Okay, MT4 only have buy limit, sell limit, buy stop, sell stop. That's it. Okay, guys. Okay, let me continue. Right. Where am I right now? The breakout and reversal. Okay, For the reversal, okay, I like to play with the reversal when I see the divergent or valid, like engulfing candle, for example. Okay, here, let's say I would identify this my resistance level, okay, and now I see that, okay, let's say this morning I saw the OB, okay, bearish engulfing, and smart money, we call bearish OB here. So I'm gonna wait for price to close first and pull back in the OB. I'm gonna trade, but based on the M5, where my OB, okay, my OB M15 was here, right? And this all-time high, the body is closed below, and if price can close below this one is going to be the chain of character for the SMC. Right now I'm going to sell if price pull back with the OB. I'm going to look at the M5 as well, right? You see they have the first rejection, okay, M5, M15 also have the rejection, okay, and it was ranging here in M5. I remember. Go back to the M5. What do you see? M5 starting to make the triangle, okay, from here, triangle. This was the triangle in M5. This one is what my morning, that would be around 7 a.m. or 5 or 8 a.m. I saw this, okay, and here after that you see it broke, it's closed below, right? This is closed below, it might pull back, and this one private will sell, right? Break, go back up again. Now go back up again, you remove this one because that's gonna be here, it's gonna be the bigger picture, okay, and this is M15, okay. Remember that as long as price did not make the higher high, cannot close above, then you see that's gonna make the lower high, okay. Now you see the triangle. I don't see that the close, break and close below, or I would say that it's close below my support level. That's too big, right? And now if price can close below this level, the body, then I would consider that a market structure shift, chain of character, right? Pull back and close below here, price gonna pull back to where? To this OB M15. That is another entry, right? By falling, and now they also make the, now this is your BOS, okay, chain of character here, pull back to the OB and make the break of structure either here, right? And price might pull back, they might pull back here again, or they just continue to go, or here you may see it might respect here. Don't forget, don't always look at M15, look at H1, right? In H1 time frame, you'll see that here we already buy in here, rejection here, right? So these are supply zone, you will buy here, okay. That's why you don't always look in the M15. Go back to the M15 to look, right? And falling and make a break of structure here, and all the way to where? To H1 OB is what here, okay. No divergence, but there was a breakout, a triangle pattern form. We see that, we see that already, okay. Yeah, done. Okay, so let's just have a checkout or 3 checklist for the breakout strategy. Look for the 3 C's breakout trading. So before it's breakout, you will see that price is considered or ranging. Okay, it could be flat, could be triangle or rectangle. Okay, it breakout and then you buy or you sell. Confirmation, it could be, to me, my confirmation is the body is closed above, not the wick. Okay, and continuation, price should move away from the breakout level decisively, meaning that just now we know that it's really strong. Gold is a bullish. Whenever price have breakout, we know that it continue to go uptrend. Okay, reversal strategy. Okay, checklist, extended moving, extended move, which is price stay far away from moving averages. I already show you guys just now. Divergent presence, so you see the bearish divergent or bullish divergent, which is price move against the indicator, price move the opposite, price move opposite direction of the indicator. Okay, and reversal patterns such as double top, double bottom, head and shoulder, engulfing candle, key level rejection, strong support, and resistance holds. Okay, okay, so now I'm gonna say like we just put things together. So first, what you need to do for the swing trading checklist, look for the weekly, for the trend, daily setup. You can like identify support and resistance in daily, and your entry would be in H4 time frame. You hold the duration, usually 2 to 10 day average, or it could be like multiple week. Okay, it depends. Okay, chart element, key support and resistance, you can draw the trend line, or you can use the moving averages such as EMA 200. If price is stay above EMA 200, you wait for price to pull back and then you buy. Okay, momentum indicator, you can use RSI for the overbought, also MACD or volume for confirmation. Entry, you're gonna entry at the breakout, or you wait for the pullback, or you want to wait for the reversal. Okay, pattern complete, meaning that whenever, let's say, you're gonna see double top. Complete, meaning that price have to break below the neckline and I pull back, then you sell. These are pattern complete. Okay, what is it? Okay, correlation, you can use the correlation for your confirmation. Like if you trade EURUSD, GBPUSD, you can use the DXY for your confirmation, which is if the dollar at the resistance level, EURUSD, GBPUSD should be at the support level because they are negative correlation. Okay, no overexposure, leading indicator. Okay, I think leading indicator, to me, none. If talking about leading indicator, I think that would be Fibonacci. Those like RSI, MACD, stochastic, to me is like a lagging indicator. Okay, final check, risk management set, you can be you can use 1 to 2 risk per trade, and you can like trade plan documented. So whenever you enter, okay, you should just maybe do your trading journal. Okay, multiple confirmation, at least 2 to 3. Whenever I see 2 to 3 confirmation, I could go for the bigger lot size because it gives me more confidence. Okay, okay, so step by step trade example. For example, like you look for the EURUSD price above 250 or 20 SMA or EMA, up to you. Look at the daily chart first, spot bullish or bearish pattern, or price is at the key level or not. Okay, for the daily charts. And after that, you can look for the momentum, whether the RSI or MACD is above 50 or is below 50, meaning that it's above, meaning that it's strong bullish, if below 50 is bearish. Okay, you use correlation like USD CHF falling, meaning dollar is weak, confirm US a weakness. Okay, because dollar USD CHF is a positive correlation with dollar, meaning dollar rising, USD CHF will be rising as well. Use H4 chart to find the breakout, or you can find the like support resistance and then you enter at H4. Okay, risk management, stop loss, like the flag right just now, like triangle, let's just say in H4, no, in D1. Okay, D1 here for gold, right? We saw the here. Okay, let's say here. Okay, you're gonna enter when it pull back, right? Your pullback here. The stop loss you put below this low, or you can put like below the like triangle. I'm go to H4. Okay, look at H4 time frame, right? From here we would say this is the resistance, correct? Breakout, now breakout, then you're gonna wait for the pullback. You're gonna wait for the pullback somewhere around here in H4. You can use, I'm gonna use the Fibonacci from this to this. That will be at least 50%, right? Then you're gonna entry. Okay, almost hit 50%, but it's not. Okay, here and then rising, so wait for pullback. Stop loss you put like below this or below the low, which is here, this low. Okay, and then you aim for TP. You measure from this breakout, your entry, that's gonna take profit. Okay, it would take like 1.5 months, right? Just now we check, yeah, about 6 weeks, and then hit take profit. That will be how many pips? This for swing 40,000 point is a for the, how many pips is it, guys? 4,000. Is it 4,000? Yep, 4,000. Cannot be 4,000. Yeah, 4,000 point. Yeah, correct. Sometimes I confuse. Okay. That's all for today, guys. Thank you so much for joining. I think I will have a little bit of time. Let me just do the setup for you guys. Okay, the current go right now, right, just now gold falling. Now there will be someone buy at this level, the opening price of yesterday candle, buy at 42.45, 42.45. That is also the OB. Okay, just now, right? So this is our buy entry. Okay, right, and price has, from here you can see the rejection. Let's just say 300 pip. Now we look at the M15. Okay, for the M15, I would say that seem like price has make the higher low. Okay, I think now they are forming the triangle in the lower time frame, which is M5. Okay, basically I think now they are sideways right now. Okay, so you need to wait for price to close above 70, let's just say 25, 47.75. If they can close like the body close above then maybe you can just maybe buy, and you would aim for at least this on your TP1 for the M15. Okay, this is also another neck resistance level. Okay, if today price closing with bearish engulfing, which is the body close below 42.45, tomorrow you wait for pullback and then you sell. Okay, so tomorrow, okay, if today candle close with bearish engulfing, tomorrow you go to the lower time frame, wait for price to pull back and then you sell. Okay, closing and opening is a similar price, almost the same. Let's just say similar, 43.55. This was the opening. No, this was the closing. This was the opening. Okay, and now we're gonna look if today price gonna close with bearish engulf. If not, okay, if price not closing with bearish engulf and the candle close shorter than this candle, tomorrow you can look for the buy entry. Okay, all right guys, so now our goal is sideways. You're gonna wait. If the close below here, pull back, you sell, continue to sell. Okay, if close above 42.75, pull back and then you buy. Okay guys, okay, that should be all for today guys. Thank you so much for joining the webinar. I'm gonna see you guys again on next Tuesday. All right, okay, this is the key level. Okay, bye for now guys, take care and good luck to all of you. You're welcome. Bye for now guys, take care. Bye bye.